What's up, Nick? What's up, everybody? We get started in just a couple minutes here. We'll let everybody get in that wants to be involved. What's up, Tom? What's up, Nick? Timothy? Hope everybody's doing well. So, yeah, news kind of shook things up a little wee bit. I'm going to go over the trades that I took and yeah, just kind of do that first. And then what we'll do is we'll build case studies around the two pivotal points, which are here as well as here. And we're going to start talking about how we could have got involved. Yeah, so that's basically it for today. And guys, anybody who's kind of been welcomed in here to be able to kind of be a spectator from Instagram. I'm going to be doing that once a week now, just allowing 5 or 10 people, depending on how many I feel like having, just to let everybody know how we sort of do things, how the community operates, build a little bit of a model around the strategy. Guys, I'm only warning once. If you unmute your mic, you will be kicked out. Okay, unless I cue you to talk. Anybody who's a member already knows that. But like I said, if you decide to throw your mic on and I hear you, it's just automatically going to get kicked out. So do not cue your mic unless I cue you to talk. That's it. Very, very simple rules. It's written in basically ink here. So we're going to get right into this. Like I said, we're going to wait one more minute and we'll start talking about first and foremost, the trade that I took, where I partialed, why I partialed where I did. I ended up getting ran out shortly after. Yeah, I typically don't even like to trade. I was going to partial out quite a bit earlier, and yeah, I just didn't bother. I ended up getting a little bit lucky, to be honest with you. But yeah, I don't really like holding trades through news unless I'm positioned somewhere near the top. But anyways, I ended up letting this guy run. So I'll just show you the logic behind it, what I was looking for, why I was able to partial where I did. And did not get involved with this guy, to be honest with you. The second one, I took a half decent trade. I think it ran about 26R or something like that. 25, 26R in this region. But yeah, just kind of looked at this pivot point and where I'm expecting it to go. And yeah, we'll start building something around that. So before we sort of get into this, let me just get out of here and just kind of start talking about what it is that I took. And then we'll start building the two different case studies. So first and foremost, let's get out to our sort of higher time frame. So in order to build out a proper trade idea, a proper case study, a proper end of day markup, you can't just use the 1 minute time frame. You can't just use a 15 and base everything off the you have to be able to piece all these things together from that higher time frame to be able to really confirm what it is that you're looking for. We've been waiting as a community for what is that, June 1st, so 2.5 days for this higher time frame intention, or what we're hoping to be this higher time frame intention move. So nobody knows for sure what's going to happen. We base our analysis as well as our entry models off of probability based off of previous price actions. So when you look at sort of price and how it's sort of developed over the course of the last few weeks, even days, you can kind of see what's happening here. We're starting to get that slowdown in the market, and that was signaled by essentially this choppiness that kind of happened into the flip zone. The flip zone, as most of you guys know, or anybody who's in the community, we kind of talked about this flip zone. I think it was 2 weeks ago now, in and around when this happened. We had a level that sort of went right here. So this is kind of like that first sign of weakness in the market, where potentially we're seeing an influx of orders to be able to push price down, filling the bags of the sellers, the higher time frame sellers, pushing back through, liquidating highs, getting this V-shaped recovery. So let's just build this across. Like I said, I think it's to no surprise that we're in a demand turning into a supply zone. We have levels of liquidity to take. We have inducement before the POI. Absolutely, really, this is just. It cannot get any more textbook from the higher time frame. Now, it doesn't mean that we can't run the high. Doesn't mean that we're not going to continue this way. It just means that we're getting criteria based off of our higher time frame intention to potentially start running into deeper portions of this bullish, this new bullish leg that's been sort of brought into the market. So, yeah. Before I keep running my mouth off, long story short, what ends up happening here is you can't really see too many of the details on the 4 hour. This starts to make a lot more sense on the 15-minute, and this is why we utilize multi-time frame analysis to be able to basically see this exact schematic show up here, and then furthermore show up here, furthermore show up here, show up here on multiple different time frames to be able to kind of confirm what we're already seeing on the higher time frame to be able to get into these very high probability setups. So let's jump down onto the 15, and what I want to do is just kind of build out what it is that I saw, and then we're going to build out a case study. So again, this is the 4 hour POI, so you can just see essentially how this is built into. We've had this sort of I don't know what you would call this slowdown in price. I'm sure this is probably during Asia. Now, what ends up happening, one of the most important things that we sort of teach, or that we all kind of use in our trade ideas, is the liquidity to take, liquidity to target theory that we use. So when you look at this, and we've essentially broken some form of swing structure right here. I believe this is 4 hour swing. This is kind of like a internal structure. I mean, we could actually call this our swing point, but yeah, let's just go with. I'll get into the details of that a little bit later on. But yeah, we have a 240 break of structure that happens here. Where do we break it from? Well, we break it from, there's an interaction zone that sort of happens across here. Could we have potentially looked for the confirmation entries within this level? For sure. The bottom line is that we're leaving, and we've essentially changed character back up to the upside, or we've had an order flow shift back up to the upside, basically when this change of character had happened. So in order for us to get back into a pro trend, right? So the trend is now here to here, a pro trend, pro order flow state. What we need to look for, in theory, is going to be a 15-minute realignment of order flow. So if you look across here, essentially nothing has happened. We kind of push back up into this range. So we can see that we have liquidity to essentially grab from the market across the the late sellers that happened in this leg. And now what's going to end up happening is, once we kind of come up into this region up here, what ended up happening for me at least was I saw this morning, I believe during London or during Asia. During Asia is when we essentially had our order flow shift, right? So our order flow shift happened. It did not happen it didn't happen relative to anything over to the left-hand side, other than, this imbalance. We don't really use imbalance in this community in terms of like POIs or anything like that. So what I basically looked at was this general larger POI that is sort of on the 4 hour. If you go to the 4 hour, you can see that last sort of up move that does take liquidity and then pushes the market immediately down into new structural lows. We essentially take out the internal structure point, and then furthermore, we end up taking out the swing structure point, which is basically confirming, or at least the theory is that this is confirming, higher time frame order flow shift. And you have to remember, the market's just not going to taper off into new territorial lows, and take out the daily swing low. And the reason why is because if we do want to continue down on our way down to new swing structure lows on the daily, we need to understand that the higher time frame is going to want to fill more orders in and around these levels. We have lots of levels to take liquidity from to be able to fill these buy side liquidity orders with sell side orders. So that's basically how I'm viewing this. So once and again, I kind of rushed into this, and I'm going to show you a couple of the rules that I ended up breaking, but I'll show you why I was able to, and just kind of how I justified getting into this very specific position. So long story short, saw a order flow shift that happened in and around this level right here, right? So we have a change of character. Again, we like to call them order flow shifts in this community. So order flow has kind of shifted at this level. So this is kind of the decisional order flow shift. And the other thing I would look at would be this demand level right here, as basically we have a level of liquidity to take across this low into this level. And what ends up happening is once we break through this, even though it's a weak break, we can see that essentially we've had this like V-shaped recovery, or this aggressive order flow realignment for our potential trade idea. Okay, so this is the 15-minute V. Okay, so we've come back up into here. And again, I'm going to build a case study around this specific piece in a minute. I'm just going to talk about what it is that I look for. So as we push down, I missed this. This happened during London, wasn't quite awake yet. Unfortunately, this is the move that I would have loved to get involved with. However, just wasn't able to kind of get in, just based on the fact that I wasn't awake for it. So once we come down and we essentially break this point right here, right, which is the absolute lowest point before we actually have this bigger break. Once this broke, where did we break from? What was the last up move before the down move? So I was just monitoring this area. Now, this is a little bit clearer on the lower time frames to be able to see sort of like the levels of liquidity to sort of take into the market, all that fun stuff. So what I ended up doing was jumping down onto my lower time frame, and essentially what I saw here was I had levels of liquidity to take. We had some form of inducement, which was basically at this level right here. We had that realignment that came into this first area. So without inducement, there's really no trade idea. And if you look at just this specific idea right here, when you look at liquidity concepts, and if you are constantly looking to have liquidity to take from the market and then liquidity to target, if you were trading just right here, we don't really have anything to necessarily target. We need to have orders to kind of compile here based off the mitigation process. As mitigations happen, and this failing to take out relevant levels of either swing structure or internal structure, depending on what it is exactly that we're looking at, this becomes a targeted low, which is essentially what I waited to see. So you don't necessarily need to get involved with anything like this. There's no level of liquidity to take, so this becomes the level to take. Same with this at some point. So this is the taken, this is the target. So what I ended up doing was what did I see here exactly? I'm trying to remember. Oh, yeah, okay. So we had sort of like this 15-minute PY. Was it a 15 or 10? Sorry, 15-minute POI. Give me 2 seconds. So we had this guy kind of sitting like this, and then what we did is went down onto our 1 minute, and you can just see sort of like the refined areas that happen just above liquidity. So the first area that is going to be refined just above liquidity is going to be this region right here, which has an interaction with demand over to left-hand side. So this is a little bit of a dicier sort of entry. And the reason I say that is because we could have easily come up to this extreme. But ultimately what I was looking for was the 5 second to kind of show me that weakness to be able to potentially get involved at this level. And the only reason I was able to even consider this level was because we were in higher time frame bearish order flow. We had levels to take. Usually what happens is once we take from a level, there's obviously going to be a slowdown in price, and then we start to look for potential confirmations in the actual level itself. So this is that sweep into the POI. Now, the other way you could have viewed this too, I believe, was on a, if I'm not mistaken, it was a potential 3 minute. Yeah, so if you used this 3 minute candle right here, same exact thing, right? So we can use up to a 3-minute candle to kind of refine, and it just becomes a lot clearer, right? You see that last push up that does take liquidity, pushes, expands down, and then essentially we have liquidity to take in the market and then something to target in terms of expectational order flow. So yeah, just wanted to kind of show that POI selection. Now, of course, this POI doesn't actually mean anything until we get kind of like that lower time frame sauce that is essentially going to potentially get us into the trade. But like I said, I utilized this specific POI based on the fact that I was expecting a slowdown in price immediately after we had taken liquidity from the market and basically shown some form of a reaction in the terms of seeing this V-shaped recovery, which is more apparent on the lower time frame. So can you guys drop a 1 in the comments if you understand how I was able to select this, and a 2 if it's just not quite making sense? Cool. So the POI that actually takes liquidity here is now going to be the area, if you go like this and just kind of map this across, the area that takes liquidity is going to come from this area now, right? This is the actual area that takes liquidity from the market. And now what we can do is jump down onto our lower timeframes to be able to see what it is that's actually happening here. So there's a couple different ways. Now, I did not get involved right away, so I'm actually going to show you what I ended up doing. I'm just going to get rid of this guy. I had saw kind of like this down move before the up move, kind of, I wasn't super sold on what was happening here, to be honest with you. Even though we had this little demand failure here, I saw all of these equals kind of building, and I thought, well, maybe we're going to run a little bit higher into the next kind of POI. So what kind of gave it away to me was that we had an order flow shift within an order flow shift. And what I mean by this is that we essentially we had interaction with supply right here. We pushed up, we failed to take out the high. And then once we essentially broke down from this low, I looked at this and I said, okay, well, now we have 2 points of liquidity to essentially target, and we have a point of liquidity to take. So all I do in these very specific circumstances is I put my order sitting directly above here, or I market execute as soon as we basically come above, excuse me, this region, thinking that we can basically come into more of this extreme area. We always, like I said, I always want at least 1 point of liquidity to take from the market, if not 2. So again, this is just my personal opinion on how I would have got in and how I did get in to this very specific position. So like I said, as soon as we kind of crawled through here, I given myself a 1.5 pip stop. And market executed. I think I actually got involved on my market fill. It was 145.57. And that was basically my position, just like this. So this probably would have correlated with this, this bearish engulfing candle. So that's how I was able to justify getting in. And as soon as I moved over, so knowing full well that we do have unmitigated levels that sit above to the left, and we're not at extremes. The idea with this is that I want to manage a little bit more aggressively, just based on the fact that we do have unmitigated levels that we could travel into. We do have perfectly planted equal highs to run. So as soon as we break this low sitting right here, the immediate thing for me to do is either take a partial to be able to cover my risk, or in my case, what I ended up doing is just moving over to break even, because with an unmitigated level that sits above, I just want to be a lot more careful with what it is that I'm doing. So I hope that makes some sense for you guys. So yeah, like I said, as soon as this level right here ended up getting taken, we'll call this a 5-second boss. As soon as that got taken, I had moved over to break even. So I can just mark this over like this. And this will be I don't have a break even one anymore. Okay, so we'll leave that like this. And now what I'm going to do is start looking at targets. Obviously, the first target would probably be the week low, based on the fact that we're not expecting this to come up into new areas until we break substantial levels down to the left-hand side. So what I ended up doing is I looked over to the left. I'm going to go to the 15-minute first. But what I ended up looking at here was, okay, where was the last area? Because I always like to target where I'm expecting the next sort of reaction to come from, right? And if we look at this right now, we utilize supply and demand and interaction zones. Does anybody have an idea of where the next level, where possible reaction can come from? So one of the levels I looked at was right in this level right here. I was a little bit skeptical about this level, but I didn't see anything that was super, super clear in terms of the 15 minutes. So what I ended up doing is, like, we could have looked at this level to take a partial. What I was looking for was something a little bit deeper, just based on the fact that I was trying to hold this down into at least the discount of the leg. So what I ended up seeing was this guy right here, right? And now what you want to do is, you can see that this is all partially mitigated stuff. So we're kind of unsure of what's mitigated, what's not. So what I ended up doing was just jumping down onto another time frame. I kind of saw this 10-minute that sat here like this. I looked at this, and essentially what I want to do is get down onto my lower time frames to be able to say, okay, well, what else is there that's very, very specific here? And what I ended up seeing, I'll just get rid of this because now you can see it, is this very specific doji that ends up breaking through structure. It has no mitigation whatsoever. So I basically targeted this level, and this was, in all fairness, pretty fluky. If I would have, if there wouldn't have been news today, I probably would have held this and probably only taken about maybe 40 or 50% of my position off. But because it was a news day, I ended up taking about 80% off at this demand level. And you can see that this has some really, really good interaction from this last sort of supply range that rests right here. And you can see that push down and then invalidating the supply level. And then this is what actually pushes us through at the origin of the move. So does everybody understand how I was able to kind of select this very specific move to be able to start looking for heavy partials? Anybody have questions about how I was able to pick out this zone, or was that pretty clear? That whole bullish leg just seemed like a heavy pile of 4-hour built-up mitigation waiting to be taken out. Yeah, exactly. And when you start to get into your lower time frames and stuff like that, and you start correlating supply and demand for your interaction areas, you can start to see very specific zones that are going to likely get mitigated to then produce reactions. Now, am I looking to trade from here? Absolutely not, because everything that we've basically built for our very specific trade idea is this pro trend, pro order flow move that we were looking to correlate with higher time frame narrative, right? So I'm looking to basically take a piece of the pie off at this level. Like I said, because it's news, because it's Friday, I was looking to essentially, I actually took it off a little bit high. I believe on the 1 minute I had something else on here as well. I ended up taking it off at this very specific level right here. You can see just underneath liquidity. Wasn't sure what was going to end up happening here, so I ended up taking my 80% of my position off right at this level, so around 24, yeah, with commissions, all that kind of stuff, about 24, 23R. So I'll just play this through and let it do its thing, but you can see it's just breaking down. Yeah, obviously we get the news, and then we basically get the tap into the level, and then we start moving away. So yeah, definitely super happy that I was able to scale out of this. Like I said, normally if there wasn't news, I probably would have held this a lot longer, if I'm being honest, and taken a lot less of my profit off the table. But yeah, just given the fact that we did have a news event, yeah, I ended up taking heavy profits off at this level. I'm just going to go through the questions really quick. This 1 minute POI, you said it was decisional. What was your entry model for it, as you have taken the extreme candle rather than the flip zone reaction? Which one are you talking about? Are you talking about where I took profits from? The entry, the start. I already went over all that, man. I already went over all this. The reason I took this was because we had interaction with this area. It was above liquidity. We got confirmations. Order flow realigned twice for us. I pulled trigger. This one right here. Yeah, that's exactly what I just went over for like the last 15 minutes. This exact, does everybody understand how I was able to get into this and why I was able to get into this today? Cool. You can watch the replay a little bit later. I'm not going to be going over this entire thing again, unfortunately. Like I said, I've already gone through it right at the beginning of this, and that's what I built my entire narrative around, was this area. So, okay, now what we're going to do is just kind of get rid of our drawings that are in here. And I want to be able to look at the pivot point that happened. When was this? So this happened, yeah, getting into London, I believe, a little bit further. So let's get out of this now. Good question, but can you share your chart colors at the end? Those aren't getting shared unless you're involved with the community. Yeah, they're Fractal Market exclusives, unfortunately. You can join the community if you'd really like. Be happy to give you all kinds of stuff. Yeah, part of the sauce for sure. Join and get in. No freebies. I give all kinds of freebies, man. Unfortunately, yeah, I just can't give it all the way. Lucky enough to be in this call. So, anyways, let's get into this, guys. Save the questions till the end, please. Let's keep going here. So, the case study I just wanted to build around was obviously this level right here. So, got some questions too. About, where do I see the order flow shift? And I believe my guy Jet is the one that kind of posted this in. Do I look at this or do I look at this, right? So put it this way. If we left from this area right here, so let me ask you guys this. If we broke this level right here and we came back up into here and we were looking for confirmation entries within this level right here, would we be counter or pro order flow to be able to take sells? Okay. So we would basically need to see a 1 minute realignment to basically happen like this. Now, obviously, we would need some form of liquidity or potentially some form of liquidity to take and liquidity to target. I would agree that this is a pro order flow move. Now, because we are leaving from a demand level, and if that was the case and we had a 15-minute change of character to come back up, I would say that we would have to view this as potentially counter order flow, or just be skeptical about the actual extreme that did take liquidity. So both answers are technically right. However, if we did see an order flow sort of realignment at this level where we did change character back up to the upside, I would probably have to view this as a counter order flow move. So I hope that makes sense. It would depend on essentially how it would build off of this level. If we would have seen some sort of interaction like this and then broken this very specific level to come back up, this would now be a counter order flow move that we would need to see a 15-minute realignment to be able to then target the liquidity that we've just printed. So because we essentially broke through, guys, questions at the end. Questions at the end. I've already asked you guys. I'm happy to answer them at the end. Just hold up. Let me get through this. So demand fails here and demand fails here. So we have two levels of demand failure. Essentially, what we're looking at up in this region is we are basically demand has failed, right? Like there's no ifs, ands, or buts. So we can now view this as a pro order flow move coming up into, let's print that, into this very, very specific area. Now, what we're going to do is some people I think played this flip. Did anybody play this flip in here? Now, the only thing I don't necessarily like about this flip is that like there's no real liquidity to take. Maybe on the lower time frame there might be. So let's just have a quick peek at what ends up happening. So we have interaction, yeah, demand, oops. And sitting like this, so supply possibly resting up in here. You could have potentially got involved. Let's have a quick peek at this before we build the case study around what we are actually looking at. The other thing I want to note is that we are in fact in the yeah, premium of the leg. Ideally, we would like to see the upper 25% of the actual leg get mitigated. However, it doesn't necessarily mean that we can't get involved. So what I would say in this very specific circumstance would be, there's your POY, right? We could probably bring that guy down like this. We do have one form of inducement right before. We essentially tap in and mitigate. So let's get down onto our 5 second to see if there was anything in here that could have got us involved right away. Yeah, so you got the flip that sits right here. There's a level to sort of take into it. I would say that this is a reasonable way to sort of get into the market, would have been somewhere in here. I probably would have got involved just above this, so I might not have gotten tagged in. If I'm being completely honest, we basically get our chalk here. Once we chalk up, ideally, I would have wanted to sweep into this, have that level of liquidity to take. So I don't know if this would have been a valid setup for me personally. That's just the way that I view it. So the next thing that I would look at is, I'm not going to force this entry, right? If it doesn't go, it doesn't go. But yeah, there wouldn't be any other valid entry in here for me personally. We do see this sort of like very, very small chalk right here. This is not enough for me, I don't think. I think I would have wanted to see something a little bit more aggressive. There's that V-shaped recovery, change of character. And obviously, like I said, ideally, I would have wanted to see this leg take liquidity from here to be able to fuel the move to then come down. Does everybody understand? Yeah, why guys in the community, at least, why this wouldn't necessarily be a valid setup. You could have probably snuck in here, but ultimately we ideally would have wanted to see this get taken to be able to send this into new lows. Perfect example of, you know what, you either trade your rules or you don't, and you force stuff, and then all of a sudden we end up more in the extreme. Right now, if we end up in the extreme here, not for me. No, I don't think I would have taken that. Like I said, the flip zone is here. Like this is the last place of demand, right? This is the interaction zone that we would have looked to kind of get in. You know, maybe in the heat of the moment, maybe I would have pulled trigger. Very, very tough to say. But yeah, again, wasn't awake for any of this. This happened during London Open, I believe. But yeah, ideally with your flip zone, you would have wanted to see something along the lines of this, right? And then you just don't trace your trades, right? You just, criteria is not met. You're not going to force stuff all the way down, get caught here, get caught here, get caught here, right? So that's just my 2 cents. If it doesn't line up, it doesn't line up. Obviously easier said than done, but that's how I'm viewing this right now. Okay, so essentially this ends up running. So yeah, you could have potentially, screwed around in here, possibly got involved. Like I said, the reason I wouldn't have is because I didn't get my exact criteria that I would have looked for that liquidity to take and liquidity to target. We had all kinds of targeted stuff, but we didn't actually take from the market that well. So boom. Okay, so let's have a look at this now and see what ends up happening here. That would have been something I could have potentially got involved in. Yeah, all kinds of liquidity to target. Anyways, I'm not going to sit here and tell you that I would have got involved with this. I probably would have been a little bit reluctant to do it just based on the fact that we do have an unmitigated extreme. I probably would have looked for a realignment, which we see here, and then possibly gotten in on this guy with that small level to take into it, potentially. There you go. Probably would have got ran out, to be honest. Go back up to this one, and it ends up dropping off. Okay, so anyways, we've got all kinds of liquidity to target here, guys, and ultimately what you would want to see is this sort of low down here end up giving out, right? Which, okay, we basically match the low. We just to say wicket, I wouldn't call that a structure break, and then we start realigning back up to the upside, right? So this low right here fails to produce this high fails to produce a new low. So now it's a question of, okay, well, what's the next move in the market, right? And to me, the next move in the market is this beautiful unmitigated extreme up here, right? So looking to trade anywhere in here, all these built up mitigations, what is this going to be used for? LTT, right? We're going to be looking to fill larger bags, liquidity to take, to be able to then look at the larger targeted lows that are going to end up happening across these levels. So let's go out to here and start building this case study. So potentially could have got involved with something like this. Let's just kind of see what this would have looked like. So this is obviously playing that flip zone, possibly like a 1.5 pip stop. If you would have got involved, you could have even covered the high potentially for a 2 pip, and then come down into, these lows. Ideally is what you would have targeted, 1 to 6.11. You would have had more than enough time to either take a partial or potentially just move over to break even and be able to say that ultimately, anytime that I like to play, anytime I look at kind of playing the flip, I'm usually a lot more aggressive with my management. And the reason why is if we have an unmitigated extreme that ends up getting built for liquidity, I'm not bothering to, bet all of my trade based off of this flip idea, when now all we've done is essentially produce liquidity and match equal lows. Yeah, I know. I don't fuck with 1 to 6 anymore. I sit here and wait for 1 to 30. First world problems, I guess. But anyways, the bottom line is there was more than enough opportunity to get you over to 1 to 4, 1 to 5 to be able to scale out and take 25% of your risk off, and then just be able to kind of go on your merry way and know full well that we do have this unmitigated extreme that correlates with the actual initial take on liquidity that brings us down into new lows and fails demand. So with that said, let's go over to this level right here. And again, guys, this is a case study building session, not a backtesting session. So we're just looking at things in hindsight to be able to utilize our strategy, be able to get that muscle memory to be able to develop what it is that we need to basically be able to execute these things in real time. So what I ended up seeing personally was I looked at this 15-minute this 15-minute supply zone. And if you wanted to really kind of narrow this guy down, I kind of built like a half-ass case study around this beforehand. But if you look at this level right here, right? Okay, we don't tap in. Now, depending on the feed that you use, potentially maybe you got tapped in to this, but I use forex.com and I don't see this as a tap into my very specific POI. So if FXCM does, then you could essentially use your refined POI to be able to potentially get yourself involved with this. But this is a pro trend, pro order flow move. To me, I did not tap into this. So what I would say is if you're using forex.com and we've only tapped into the 15-minute POI and we are pro trend, pro order flow, we've tapped into the 15, what do we need to see? One-minute order flow shift, okay? So in the case that we have a 1-minute order flow, like where would that order flow shift start? Yeah, exactly. So what are we looking to play here? We could look at this potential flip, right? That's the first level. So we're going to look at the flip. Okay, so we're going to look to see if there's criteria in here. Bring this guy back. Where's the next level? We got the extreme, right? So the extreme kind of sits. Now, you can't see anything super clear here that's not mitigated. So what I like to do and stuff like this is kind of put myself down a couple time frames to be able to understand where the kind of precision kind of comes in. I would say that reasonably, I probably would have looked at something along the lines of this. But yeah, stacked up liquidity, I would probably refine this down to the wick. Let's go down to a 15 second just to kind of see. Yeah, something along the lines of this would be a little bit more sensible in my opinion. But yeah, again, there's no like perfect way to be able to say that I would have got into this very specific setup. So now what I'm going to do is you can see the 1 minute. Okay. So when you look at this, okay, and you look at what's happened here, right? We get the, basically we get the chalk up, we get the chalk down. Is this a safe area obviously we can see, is this a safe area to be able to get involved in the market? Okay. No liquidity to take from the market. We do have targeted liquidity, right? We do get the order flow shift, but the problem is there's nothing to take. So what ends up happening is this ends up getting taken into the extreme for us to then run liquidity. And that's how I view this personally. So possibly could have got involved on something up here. We need to see a level of demand fail. Where does demand fail from? Demand fails here, right? So you can see this very, very small liquidation into the POI, right? Liquidation, push down. The problem again is no liquidity to take, no liquidity to target, right? So can we take this position right here? You know what I mean? So we have very, very specific rules for a reason. And it's not just to, you know, have something in hindsight to say, oh, well, we didn't have this, or like we didn't have it. So this becomes liquidity to take, and then this becomes liquidity to target, right? It's the same thing over and over. Same exact thing. Took that entry and got swept. It's also a poor chalk, 100%, right? Like I said, we don't have a flip. If we had a flip in here to be able to take this like this, I would take the extreme. Why? Because the flip acts as liquidity to be able to target the next area. So looking at this, this is a little bit difficult to get into. If you were a little bit premature with how you wanted to get in, you could have possibly done something like that. But the area that looks very interesting to me, obviously, like I said, in hindsight, is this guy right here. We have this supply to demand to supply in this area, right? So if you look at the 1 minute, we have a small level of liquidity to sort of take in here, probably a little bit more apparent on the lower time frame. Let's go look and see how this looks. This is right here. Let's go to the 5 second. Okay, supply is a range in this very specific case. What ends up happening is we do have inducement right here. We have a level of liquidity to take into the POI. Same thing right here. So I would say that ultimately you could potentially throw a limit in this region right here, or the more favorable setup for me in this specific circumstance is something along the lines of this, where the actual chalk would happen. I would be looking to put a sell stop. Anybody else? Or does everybody understand how this would be a very specific setup for that sell stop? So it's a difficult, you know, you have to be able to understand what's going on in terms of, you know, supply chains being met. So supply was created here. Don't necessarily need to get involved on the limit. You need to understand that where is liquidity going to be pulling on price. We've already taken from here. We've swept in. The next area to target is going to be the equal lows. So if and when this sort of breaks through these equal lows, it's a no-brainer. As soon as we actually break down, you can be moving over to break even or taking a potential partial, depending on how you sort of do things. So you would have been very close to being spread it out, depending on where your actual level is that you actually got entered or filled at. But yeah, looking at this right here, you could have at least let this kind of come down into, like you can see that we just matched the high here or liquidate the high. The next weak area should be this low down here. And if and when we sort of tap into this low or down into another demand region, you could essentially start looking to partial out or move over to break even, depending on when you actually did it. A little bit tricky, if I'm being honest with you. Like I said, I just to say kind of glanced at this for a case study beforehand, just to see what it looked like. This is really the only really low risk area that I would look to possibly get into. Would have been a sell stop along the lines of this failing to take the high. So I would basically, how I would have this set up is I would have my sell stop sort of set down here underneath this, and I would drag it underneath with Trade Assistant or Magic Keys, depending on what EA you're using, and have this set up directly underneath this low where the liquid region is. This is the liquid region. Why is it a liquid region? Because ultimately the market is pulling up to the supply chain. And if we're starting to see bearish intention with these bearish engulfing candles, you can start to play into that weakness. definitely a tricky one, but just wanted to kind of go over in hindsight. Like I said, I didn't trade it, wasn't available for me to trade based on the fact that I don't trade during those hours. But yeah, just trying to bring some context to how we could have possibly gotten involved in this. Can you tell the last entry once again? Yeah, so I mean, ultimately we've got the order flow shift that happens across like this, right? No level of liquidity to take. This becomes liquidity, push down, essentially breakdown. We have the change of character or the order flow shift with the V-shaped recovery that happens right here. As we sort of push down, we're not looking to get involved in stuff like this. There's equals kind of built like this. As we come down into these regions and we create new equals to be able to run into, this becomes a half decent level to be able to interact with based on the fact that this is a flip zone right here and turns into another interaction zone here. So this is where the supply chain sort of starts. So you could either get involved with a limit on this, covering the high here, knowing full well that we still have an unmitigated extreme that you could look for a realignment on the 5 second. Or what you could do is play it how I've kind of illustrated it here, based on the fact that essentially if we break through this level, the idea is that if this supply chain is holding, liquidity is now built underneath these lows and the market should start to pull down to expectational order flow lows. Again, just my theory. Obviously, this is just in hindsight. I am just narrating in hindsight right now. That's exactly what case study building is supposed to do. You're not sitting here guessing the market or backtesting. We're basically trying to build muscle memory for very, very specific setups that happen within the market so that we can be able to capitalize on them if and when they present themselves. So that's pretty well it for this sell stops over limits, an extra layer of protection. Yeah, exactly. So sell stops, I actually have a video on this in the Discord server on sell and buy stops. It's in the welcome series, if I'm not mistaken. It's about 5 or 6 videos up, or 4 or 5 videos up. There's very specific criteria for me to utilize sell stops and buy stops, and it's usually like a last resort, sort of like, okay, well, I mean, if liquidity is built here and it's built here, I'm banking that this was enough to be able to pull the market down. I can get involved on the actual change of character that would happen to go down. And you can also cover this high and get involved here, right? So go check that out. Anybody who is a community member, give yourself a little refresher as to when and why we sort of use these things. Another way that you could have possibly got involved here would have been a sell stop just below this low after the liquidation, covering this high, knowing full well that we do have built up mitigations across like this. Anyways, guys, I'm just showing you guys in hindsight. Like I said, this is not me saying that, oh, I took all of these trades. That's not the case. This didn't even happen during the hours like I had mentioned. It's just being able to kind of utilize this 5 second sauce that we sit in to be able to possibly get into a sell stop entry or a limit entry off of this supply chain that's been formed. So yeah, like I said, that's it for really today's lesson. Ultimately, this was a little bit of a trickier sort of position to get in. I can't really tell you for sure where I would have pulled trigger on this because I didn't actually do it. But yeah, just looking at this, and again, just in hindsight, I think the most sensible area would have been the limit here, or the sell stop just underneath that region. And the reason why this is such an important area is because we have this interaction here, and we also have it with supply over here turning into demand, and then supply one more time. Man, love the was this during Asia? No, it was during London. Video is the most recent under PDFs if anyone is looking for it. Awesome, thank you. London Cake, man, love the liquidity to take concept. Had I known that earlier, I would have saved myself a loss today. Yeah, and it's just an added layer of confluence that we use, especially on lower time frame stuff. So take it with a grain of salt. Of course, it's definitely worth building some case studies around seeing these actual things play out in real time and how to kind of get involved with them. But yeah, it's become a staple in how I sort of enter any position at this point, because ultimately, I'll tell you what, the more confluences that you sort of stack in your favor, the more particular you get about your entries, the easier they're going to become, and the more likely the higher strike rate you're going to have, provided that you can actually wait for these things to happen. The 5 second moves pretty quick, so yeah, sometimes it's kind of tough to spot these things out. Unfortunately, anybody who's been invited to kind of view this, as a sort of gift, if you will, recordings aren't going to be coming out. This is just a teaser of what it is that we do, so that you can understand a little bit further as to how our strategy works, and what to kind of expect if and when you were to ever join the community or sign up for a strategy-based boot camp. So, yeah. Let me ask members. I mean, anybody in here think that this membership is not worth it? Drop a 1 in the comments if you think it's not worth it. Is that enough for you? We honestly, like, it's what we do here is very, very specific. It is consistent. We deliver every single day. I'm not sitting here trying to upsell. Quite frankly, the only reason I have a community is to keep me accountable every single day, so that I'm improving my trading skills with the community, basically asking me all the right questions, right? So, like I said, it is what it is. It's not for everybody, but yeah, I would say that reasonably, this is probably the most valuable community that you're going to get in terms of actually utilizing a strategy consistently. I'm out of here, guys. That's it. Any questions to kind of wrap this up? I'll give it another minute or two to see if anybody has questions about this. But this is a prime. I could not get any more prime for pro trend, pro order flow, catching it from the very top, and utilizing the higher time frame narrative to back our medium time frame as well as our lower time frame sauce. So if there's no questions, I will see you guys on Sunday. Saturday is the day off for the community, guys. I'm going to be in Montreal for the weekend anyways. I will be back probably just in time for the Sunday look ahead or forecast. If for whatever reason it gets pushed back an hour, just because we're running late coming back, it's only a 2-hour drive, but just FYI, it may get pushed back just depending on how traffic is. I'll keep everybody sort of posted, but yeah, it's 2 p.m. Eastern time. And like I said, if anything gets pushed back, it'll be at the very most an hour. I will keep you guys posted if that's the case. I'll see you guys a little bit later on. Enjoy your weekend. Remember to take some time off for yourselves. Don't forget why you've gotten into trading in the very first place, and that's more than likely for obviously money reasons, but also for the freedom that it can provide. So don't forget to take some time for yourself. Have a good one, guys, and I will see you on Sunday.